Yo, what's up, traders? You think you are trading breakouts, but you are actually providing the liquidity smart money uses to move the market to fuel its movement. Today, I'm breaking down exactly how liquidity grabs work and the three key signs to spot a trap before it wrecks your trade. So stay tuned, guys. Now, what is a liquidity grab? What is a liquidity grab? Liquidity grabs are fake breakouts designed to trigger stop losses and fill orders for the big players. Big players like who? Who are the big players? We have the banks, we have the market makers, we have the institutions, this smart money boys, the big boys. Like, they just have an ulterior motive, and which is to what? To target areas just above highs or below lows where retail traders have stop losses or are looking to enter trades. So one thing about liquidity grab is that if you are buying or if you are selling, price will want to what? For selling, price will always want to what? Take out the buy side liquidity before selling. For buying, price will always want to what? Take out the what? The sell side liquidity before what? Reversing upwards. Okay? Before reversing upward. So the liquidity actually generates this power for the price to fuel its movement. Do you get me? To fuel its movement. So what? Liquidity is left behind for price to take out to fuel its movement. Now, you can see a block I drew. Price isn't just coming to that block because it's a block. It's because it's attracted to the liquidity here. It's attracted to the liquidity here. This is an equal low liquidity and it wasn't swept. If it was swept now, let me take it up. It wasn't swept. If it was swept, then we'll be like, okay, let's take this trade. But it was never swept. It was never grabbed. Do you get me? It was never grabbed. Now what's it now? Price will want to what? Come and grab this liquidity and what? Use this liquidity as a reason to come to our block and what? Fuel its movement. So the liquidity is what will fuel the price movement. So now guys, let's look at why you get trapped in the market. Why you have a liquidity coming to what? Break your zone. Now, here's the trap. You see that price break resistance, okay? Then you enter. But smart money was just sweeping that level to sell into your buy order. And now you are holding a losing trade, thinking it was a breakout. Guys, look at it. So, most traders trade what? Support and resistance, right? Here's the disadvantage, okay? This was why I stopped trading S and what? Arrow. There's no strategy I haven't tried out. So now, let's just assume we are trading support and resistance, right? And now what happened? Price gave me a sign. Price what? Price broke. It broke what? It broke my zone. It broke my resistance level. So now, what was I anticipating here? Who can tell me? What was I anticipating here? As soon as price broke it, I was anticipating what? A buy, right? A buy. Okay, not knowing that. Okay, not knowing that what? Price was what? Was just planning to what? Grab what? My buy side liquidity to fuel what? Its move downwards for what? The sell. Do you understand me? That's the trap in the market. That's why trading support and resistance is a risky job, right? It's a risky job. I've told you guys this thing. Check out my previous video. I said this, that what price will always want to come and grab liquidity. Okay, so now once price takes out that liquidity, okay, once price takes out that liquidity upwards, that is signaling what? A buy side liquidity swept. Now you can open up for what? A short position, right? Into what? Your buy order in the higher time frame, right? Are you getting me? Now look at this live example. Okay, let's assume I am placing my entry here, and I said what? Price should tap into this zone. Let's assume price has tapped it. These are the reactions. So price has tapped my zone. Are you getting me, guys? Price has tapped my zone, right? But it hasn't taken me out here. So I will now be like, wow, price is reversing. But this trade you are seeing is the live analysis. Let emotions. Don't say, oh, S and arrow, it has broken resistance. Oh, let me go long. Now let's look at ways to avoid trap entries. Okay, ways to avoid trap entries in the markets. Okay, the first one is what? You marking out your liquidity. Okay, structural SMC isn't a hard strategy. It's been helping me for years now. I've been trading for 4 years now, and it's been helpful. So now let's talk about the equal highs, equal lows. I've showed you equal low. Now look at the equal high. Now this equal high I drew for you, this support and resistance, you would think it's support and resistance. You are trading breakouts. Please guys, don't trade breakouts. Okay, it's not advisable. It's just liquidity. Okay, breakouts, you are trading breakout, right? S and R, right? Here is what your support, here is what your resistance, right? Good. So now as soon as it took out your resistance, that is signifying what? Please tell me. A buy side liquidity swept. For it to what? For it to sell. I said price must what? Take out what? The what? Buy side liquidity. Okay, if you are anticipating on what? On selling, that is a selling move. Okay, wait for price to take out what? Buy side what? Before what? Going downwards, right? So the second what? The second criteria is to what? Wait for confirmation. Okay, don't rush into your trades, right? Don't rush into your trade. Don't enter on the first breakout. Okay, don't enter like this is the first breakout. Now you just entered. No, you don't do like that. You don't trade like that. Actually, you wait for a break of structure or a change of character after the sweep, after price has taken out this liquidity. Now if I'm to take this trade after price has taken out this liquidity downwards, now I want to enter this kind of trade. What will I do? I'll wait for what? I'll wait for a confirmation. I'll wait for price to give me a sign of a market structure shift or what? A break of structure. Okay, with an imbalance for me. If I'm taking this trade, then what? I will what? Set my that's my structural liquidity. There'll be a mini structural liquidity that price what we want to take like this. This is liquidity in the lower time frame. So there'll be a structural liquidity that price will come and take out from me. Then what? I will go long. And in the lower time frame, I'm having a block, right? This is my block, my order block, right? So you are seeing how I'm trading it. You can just skip backwards to understand more. So here's my structural liquidity, my mini liquidity. Okay, are you getting me? Good. So that's just it. Then what's the third criteria? The third criteria is understanding the timing. Very, very important. Please guys, listen. The timing is very what? The timing is very important. Okay, it is very, very important because most traps happen right before New York or London sessions open. That's when smart money hunts liquidity. That's where you see liquidity getting ejected. Okay, like these sessions, there are sessions we trade, right? We don't trade Asian session because Asian session is more like a ranging session. Like this your what? Your S and arrow. This is ranging. Okay? This is ranging. So what? We are waiting for what? For London. London comes to what? Take out the liquidity. Okay? London will what? Take out this liquidity. Huh? It will take out the liquidity. That's what we call accumulation manipulation. And yes, London is what manipulates you to thinking that what the market is going to go long. So London manipulates. Thereafter, what happens next? New York comes in and what? Distributes. Okay? New York comes in and what? Distributes. So please follow these criteria. It's very, very important. Very, very, very important. Okay? And every time you rush into a breakout, you risk being the liquidity. Note that down. But once you understand how these traps work, like you can trade with smart money, not against it. So subscribe if this opened your eyes, and check the next video where I break down live chat examples. Thank you.